I think last time we did the podcast was almost 1 year ago. We ran out of time. I think we could be here 1 more hour.
Absolutely.
Due to popular demand, Siddiq Farid.
Thanks for having me back. It's excited to be on the podcast
Or
again.
do you think Dubai will always be an investment market?
A whole new demographics, from the Western world is trying to transition over here.
I don't think there is any threat to Dubai. But does in the long term, like 5-10 years, do we see?
No offense, but I don't appreciate when people bring that kind of stuff up, right? Because I don't think this is a zero-sum game.
Looking at the two types of market, short-term and long-term.
Short-term market, but come under a lot of pressure. The long-term rents have appreciated significantly.
How do you check the demand?
So Property Finder, they do their reports, they disclose, listen, I'm looking at some apartment in MENA and $2,000 per square for something. How does that compare to something else in the market?
How long did it take for you to make the decision? 1 hour. That's not true, because I have been 2 years looking every week at 20 properties, analyzing the data. If someone wants to enter into the real estate and the property, rather, be in the market. Hello, everyone. Welcome to the new episode of the Next Gen Rental Podcast. We are today, due to popular demand, with a repeated guest. So welcome Siddiq Farid, the founder of SmartCrowd. Welcome back. In a different setting. This new season we are showcasing holiday homes, Dubai holiday homes. So welcome to the show again.
Thanks for having me back. It's excited to be on the podcast again.
Very good. So I think last time we did the podcast, it was almost 1 year ago. We touched a lot of topics. A lot of people wrote to us saying, "Oh my God, that's very interesting, but very deep." So we should do another session. So let's try to connect these two episodes. We discuss, as I said, a lot about technical stuff, but also we discuss a lot about the market outlook in Dubai, which is the common question everywhere, in radio, in podcast, in business, in dinners. So how do you see the market today? Yesterday I read that October closed as the maximum number of transactions in history.
Number of volumes, yeah.
Number of volumes?
Number of transactions, yeah.
I didn't went deeper because
we crossed 20,000 for the first time ever in terms of number of transactions in Dubai.
And in terms of value, honestly, I didn't.
It hasn't been disclosed. We're only in the first of the month. I'm sure that over this weekend we'll get some numbers, but I won't be surprised if we had another record month. We've had multiple record months this year already in terms of value. And it's a component of a couple of different things, right? Obviously, more volume equals to more value, but also the value per square foot has increased. The median price for transactions across the board, apartments, townhomes, villas, are also at near all-time highs. It's interesting we talk about this, right? Because I remember last year when we had this podcast, that was 2023, we were almost 2.5 years into this bull cycle, and we had a very steady month-on-month increase of more than 1% increases per month on average. And, people were quite getting nervous, like, oh my God, we're in a bubble, etc. 1 year later, that trend hasn't slowed down. So I still get asked the question like, hey, when is this going to burst so I can get a buying opportunity? Or like, you had a buying opportunity last year, you could have bought, right? But you were too afraid to make a decision. And this is where, it's challenging for individual people, because we sort of make a lot of emotional decisions when it comes to any investments, particularly real estate. But you have to understand the fundamentals as to why this is happening. When you look at the fundamentals, I'm very comfortable at these prices. Mind you, have to do your homework, have to buy the right thing in the right place. But could this continue for another 12, 24 months? I think so. Given where we are as a city, the government initiatives, all the announcements that are coming, the land department just announced their real estate strategy for 2033 in terms of what they want to achieve, right? They want to go from almost 600 billion dirhams of annual transactions to 1 trillion dirhams of annual transactions. They want to double the contribution to the GDP. If that is the agenda, I bet you there'll be initiatives to ensure that there is support for the real estate sector. So why would you think the market is going to slow down? You have demand continuing to increase. You and I live in Dubai. When I got the message that, hey, we're going to host this podcast in the harbor going through Marina, my first reaction to your team was like, man, traffic and parking. Do I really want to go there? Thankfully, we're doing this Friday morning, so it's a bit quieter.
Yeah.
But I'm not looking forward to driving out of here in the afternoon. But these are growing pains, right? And that's a clear telltale sign of demand is not slowing down. Yes, there's supply coming, but supply takes time to come to the market. And we'll talk a bit more about that when we look at the fundamentals in terms of how that is, because a lot of the headlines you see now, people are trying to freak out of all the launches that have happened over the last 2-3 years and how much supply is expected to come in the market. We can unpack a little bit of that. It doesn't concern me, if I'm being very honest.
But also, think about this vision of 2033.
Yeah, that's the economic plan, yeah.
Doubling, and real estate in the end is an industry that the growth needs to stop. Like by definition, the growth of more real estate development cannot be growing forever. A population in a place eventually stabilizes.
Yeah, of course, right?
Or do you think Dubai will always be an investment market? It will always be foreign investment here, but in the end, the demand in terms of end user cannot be growing unlimited forever. Or can it continue growing?
No, so it depends, right? So I don't see Dubai as a matured market yet, right? We're still a growing market. The vision is to grow the population from circa 3.5 million to close to 6 million over the next decade, right? To keep up that pace, you need a lot more supply than we have today to accommodate that population growth. If you look at other big developed markets, etc., yeah, of course you won't have that kind of population growth. But in Dubai, yes, I think that will continue for at least for the next decade or so into the population growth. The government has taken massive steps of structural reforms over the last half a decade or so that we're starting to see the fruit of that labor today, where this has become a destination for many to migrate over here, to live, to set up businesses from geographies that were obviously in the past were already coming over here, but a whole new demographics, from the Western world is trying to transition over here, even from the East as well too. And a lot of people are leaving previous financial hotspots like Hong Kong, Singapore, London, and moving. So if you look at DIFC as a
Financial hub.
as a sort of what's the word I'm looking for? As a reference point, right? DIFC, record number of companies set up, record number of people working in the DIFC and so forth. And these are very value-added skilled labor that is coming, that is adding a lot of economic value to the city, right? But across the free zones, right? Not just DIFC, look at DMCC, Javza, and so forth, right? The number of licenses being issued onshore, all that is increasing at a rapid pace.
And do you think, do you think Dubai can continue growing at these levels of growth, being a service-driven economy, or do you think there needs to be also a transformation in other economic sectors like production, industrial sectors?
So if you look at UAE in general, right, it's a very diverse place, right? In the past, the initial wealth came through natural resources. But if you look at the last 10 years, they've done a phenomenal job in terms of diversifying their economy. Dubai, yes, it's predominantly service-driven, but there's a lot of trade that happens over here. Jebel Ali has a lot of production site just down the street in Sharjah. It was a big industrial area for manufacturing and so forth. Abu Dhabi has a port and an industrial site. You have the government doing massive investments in the next generation, which is AI, to transform and diversify the industries, draw talent. So a lot of things are happening over here that allows them to, withhold any sort of business cycles, in my opinion. And I think that also is a sign of the market maturing. I don't think we're past the phase where you used to have these boom bust cycles in Dubai, right? It's less volatile, in my opinion. And the reason for that is because of the complexion of the investors. In the past, it was mostly speculative money, hot money in and out of the market, depending what happened politically, currency-wise, etc. That's not the case anymore. The city has become less transient, meaning people are staying here longer, which allows them to commit, make financial commitments, buy homes. Mortgage transactions are all-time high. End user purchases are all-time high. And that percentage of end user versus investors is going to continue to tip towards the end user. And as that happens, that brings more stability to the market because those people are not quick to exit, etc. because this is their home. They're anchoring down over here. Yeah. I know many people that are moving over here even without jobs, just because they're not happy with the quality of life where they are, and they much prefer to be in this environment. And they're like, leap of faith, we will find a way. Either we'll find work or we'll start a business.
Mm-hmm. And if we look at the risk or challenges side of the analysis, then we also have Saudi Arabia. No? I mean, do you see a potential threat to Dubai in terms of population?
Yeah.
Because in the end, if you want to migrate to a country in this region that is growing, that has tax benefits, you have other countries that can, or cities that can compete with Dubai. And in the long term, in the short term, I don't think there is any threat to Dubai. But in the long term, like 5-10 years, do you see any potential threat to Dubai in this sense?
No offense, but I don't appreciate when people bring that kind of stuff up, right? Because I don't think this is a zero-sum game.
Yeah, that's true.
Right? I think this is all additive, right? Saudi opening up is massively bullish for Dubai. And I'll give you examples, right? China opened up. What happened to Hong Kong and Singapore real estate? Right? Those markets grew because China opened up, right? So how is Saudi opening up a threat to UAE, right? Mind you, it's great for Saudi Arabia to open up, right? But it's going to take some time to build the infrastructure. Dubai wasn't built to what it is today overnight either. They've done a phenomenal job. They've done a lot in a very short period of time. But you also have to understand much smaller land mass, much smaller local population. You have to understand, UAE local population is, I don't have the specific statistic, but, about 25-30% of the population is locals and the rest are expats. Mm-hmm. Not the case in Saudi, right? Saudi, you have a lot more locals than expats. So a lot of other social dynamics that you have to sort of manage. Do they have the same level of flexibility, ability to take risk and pump as much money, etc.? I don't know. Time will tell. Are they short on vision? Absolutely not. Are they short on capital? I don't think so. Have they proven their execution capabilities? They're trying, right? They're trying to build a lot of different things. They have some hard deadlines with Asian Games, with World Cup, with Expo. Mm-hmm. They're going to deliver just like Doha delivered the World Cup, which was a phenomenal World Cup. This is all good for the region, which is making this region more and more attractive for people to come. And as Saudi opens up, I think businesses will thrive over here in general because the markets are opening up. It's no longer, saturated markets of pockets of population. Now you can look at it as an overall region, as an opportunity to really grow your business from here.
Yeah, and as a matter of fact, this I totally agree with you. And as a matter of fact, there has always been in a smaller scale, but this fake competition between Abu Dhabi and Dubai, no? And in the end, if Abu Dhabi grows, Dubai grows. It's 1 hour away in cars.
Not even, right? The new airport is going to serve both cities.
It's in the middle of both cities, yeah.
We obviously know that
both airports, actually.
Both airports, yeah. So and then you have Etihad Rail. At some point in time, you will have railway connectivity across the region. At some point in time, it will come. It's only a matter of time.
Actually, if Dubai intends to double the population, it will go closer to Abu Dhabi. It will move.
It's already moving towards Abu
Dhabi. It's going to be a metropolis, probably.
No, of course, you have to understand, right? So, listen, you have to give credit where credit is due, right? The Dubai government is very forward-thinking.
Yeah.
So, if you think about it, Expo hosted, 20 million people during time? So, infrastructure is built to accommodate that kind of volume. Why do you think all the development is happening on the south? Yeah. Because infrastructure is ready for population increase there, right? Obviously, we have a lot of issues within the city over here from infrastructure perspective because, we have rapid increase in population. So, we're seeing that on the roads, traffic-wise, right? Like even yesterday, I thought I was beating the traffic leaving DIFC around 3:30, 4 o'clock to get home. And I was on that financial center road stuck for like 20 minutes because of 3 traffic lights. Like
Crazy.
right? But what's like on the highway was okay, but the infrastructure is already ready in the south, and they are making changes in the infrastructure over here to ease the congestion. So you're right. As the city grows, you're going more south, you're going more inland, and there's enough. Obviously, you have a lot of opportunities, but I was just reading an article. It was this morning or yesterday, around it's expensive to buy land to build as well too, right?
Yeah.
So you have to understand that the floor has also moved, right? So as people get nervous of pricing, etc., you have to look at the replacement cost, right? It's more expensive to construct today, not just from a land purchase perspective, but construction
Materials,
costs, material, labor, everything, right? The commodity prices are rocketing. Inflation is, expected to increase again. So all that has implications on hard asset valuations. So real estate typically tends to inflate with inflation.
Very good. And one of the things that for me, still also there is a gap there and impacts the traffic, in my opinion, and the different areas of Dubai is more the commercial, the availability of commercial space. If you look at Dubai, the commercial space is more focused or is concentrated along Sheikh Zayed Road, but we don't have commercial space more inwards into the area where a lot of new developments are coming, JBC, Arjan, and the villas development in Dubai land and all this. So is there any plan of Dubai of installing or developing commercial areas in other parts of the city?
Yeah, absolutely, right. So you look at the urban plan, they're identifying urban hotspots, right, in terms of building cities within city to ease that congestion. So within a sector, you have all the amenities. So and with the expansion of the metro lines, that will also help, right? Like DSO is a great example, which is one of the 5 urban hubs of the urban plan.
Yes.
Because it's a multi-purpose community, right? You have hospitals, schools, commercial buildings, and residentials over there. You only have connectivity on highway today, but the extension of the metro is going to come through DSO as well too, right? That will make it a lot more appealing. Other example is Expo City, I think, which is a phenomenal project for the future because the infrastructure is already built. They already have commercial ready because of all the expo that was already built. Now they're building residentials over there to build a city where people can live and work within that community. There's already a shopping mall there. F&B is already set up. So you will have a thriving city within a city.
Yeah.
All right. So they are building these hubs to ensure that, hey, the concentration is not in one place, which obviously puts a lot of stress on the roads, on the metro system, etc., and so forth. But these are good problems to have, right? It's not necessarily a bad thing, but it does impact the quality of life, etc.
Exactly.
And then people have to understand where and how you live and so forth, and obviously it has implication on the pricing, rental, as well as capital prices. Yeah.
So just to summarize and end this first chapter of the market outlook, let's say obviously we don't have the ball of the future, the crystal ball of the future, but we can say the fundamentals are there. Population growing, price per square foot still not par level to other cities in the world. New developments are being built, but in the same pace as the demand growth. So we don't know.
Not across the board, but generally speaking, yes, right? So on a relative basis, Dubai is relatively cheap.
Exactly.
When I say relative basis, relative to other cities that offer same type of quality of life.
Yeah.
It is relatively cheap. Like we said, we are on average price per square foot in Dubai is, I think, close to just under 1,500 dirhams, right?
Yeah.
In terms of dollars, what is that? $400 between four. I said 500. A lot less than 500.
Yeah, $400,
right? That's phenomenal, right? I'll give you an example. DIFC, which is one of the amazing financial hubs. You can buy a 1-bedroom there today for less than $1 million. Good luck buying something in the smack downtown of Hong Kong, New York, London, in the financial district for $1 million and still make cash on cash yield of 6%.
Possible.
Impossible. After taxes, right? So from that perspective, when you look at, when you zoom out and you sort of put that into context, and like, right, what is your downside versus the long-term reward?
Yeah.
So I think the fundamentals are intact. Long term, I think things are very looking positive. In the short term, you never know what might happen. Hence, we talked about this in the last episode, is you have to do your homework. You can't just blindly buy anything because not everything necessarily moves in the right direction. Not everything makes money. And second, whatever you do, whatever your strategy is, etc., you need to ensure that you have the holding power to ride through the cycle, wherever that might come. Because what's been proven, regardless of the 2008 peak and bust, 2014 peak and bust, and now, if you had held long enough, you always have made money, right? Both in capital perspective, as well as income from the rental income, and if you factor in the currency exposure as well too, because majority of owners over here are foreign investors, you have made money.
So today, we are in a beautiful 3-bedroom apartment operated and managed by Highguest, one of the main clients of Mr. Alfred, in the beautiful island of Imar beachfront. It's a 3-bedroom apartment plus maid with 3 bathrooms. It has very modern and beautiful finishings. It has been decorated and styled by the Highguest interior design team, and it has amazing views of the sea, of the skyline of the marina, and also private access to infinity pool and private beach. Go to mr.alfred.travel to book this apartment and many others in our portfolio. So that's a perfect segue for the next part of the chat. So you recently were a speaker in a Scale Middle East event that was happened here in Dubai in first week of October. By the way, we're going to do a 2025 event. And your session was about zooming in, not zooming out, zooming in. No? So tips and tricks to identify the best investment opportunity, especially thinking about short-term rentals. We have been discussing that short-term rentals is part of the business, but also maybe opening a little bit more the zoom again into long-term rental and thinking more in like investing, finding the right property to invest, thinking on return, looking at the 2 types of market, short-term and long-term. Dubai is a very dynamic market when it comes to these 2 sub-markets, not like Europe where the regulations are so rigid that you cannot change the purpose of the apartment that quickly, that easily. So, first of all, how was the event? What's your experience about the event? What was your experience about your session? And second, how can we expand that session that was like we had very good feedback about it into and helping people into identifying this investment?
Yeah, no, the event was phenomenal. Thanks for inviting me to speak. It was my session, so obviously it was phenomenal. But no, all jokes aside, I think there was some valuable insights that came out of it because we were looking at identifying investment opportunity in the short term. What are the key characteristics? How do you maximize your value and so forth? There's no straightforward answer to this. You have to obviously, one thing I advise people is do the homework, look at the data, don't rely on headlines because headlines can be very, very misleading. The way is, like you said, very dynamic. We go through cycles. Short-term market has, in my opinion, over the last, I would say 12 to maybe 24 months, but come under a lot of pressure. for various reasons, mainly because of a lot of supply, availability of short-term holiday homes per se, which has obviously impacted the occupancy as well as the ADR achieved. And secondly, the long-term rents have appreciated significantly. So obviously that has to be factored into your decision. So the way I look at this, or advise people how you want to look about it, is it comes down to what is your investment objective, one, and your time horizon. Because I'll tell you why that is the case, right? If your objective is, hey, I want to make a decent income and I want to hold for long term, then perhaps short term is not the right strategy for you in this current environment, because long term rents are really good. You have steady income coming in, and if you have a long term view, you have no intention of selling anytime soon, so you don't necessarily require that flexibility. So that is probably the most optimal strategy for you. But if you are someone who's like, listen, I want to make some income and then look for opportunities to exit and recycle that capital into different markets, then short-term becomes very powerful because it gives you a lot of flexibility. What do I mean by that flexibility? So if you look at the data again, there's a lot of transactions that are happening. One of the biggest challenges for people is finding vacant properties that they can either move into for end use, or can buy vacant properties to deploy whatever strategy that they want to deploy, whether it's, hey, I want to rent it at current market rents, or I want to do short term for the flexibility and so forth. So vacant properties gives you a lot more premium, right? As much as, depending on the area, the building, etc., anywhere from 5 to 20% premium to an average rate that is on a long-term rent, for example. So that is very powerful, right? So if you have intention that, hey, I would like to sort of sell this in the next 12 to 36 months, then short-term makes sense because one, it's vacant, it's already furnished or shows well. That in itself gives you a premium on your exit price. So yeah, you might make a little bit less on the income part, but you'll make up for it on the exit. So you factor that into your horizon and your investment objective, because short-term gives you a lot of flexibility, and that opportunity cost, it's hard to quantify, but if that is your direction, it makes a lot of sense.
But so what you're saying makes sense, but at the same time, I also like to see the short-term rental into a 3 to 5 year cycle. So it's true that probably today long-term rentals give you more yield in some areas, not in all areas, but in some areas. And it gives you stability, it gives you stable cash flow, you know how much you're going to get and when. But the data shows that in a 3 years or 3 to 5 years, depending on when you start the period, time span, short-term rental beats long-term rental, even with long-term rental today. Why? Because if you put your apartment 3 years ago in short-term rental, you would have gotten this 30 to 40% spread that compensates the more balanced income from both industries today. So I do also believe that if you have a 3 to 5 year investment plan, considering short term, it's a possibility when in terms of yield. The problem is when you tell yourself that you have a 5 year plan and you want to have more return in 6 months. But again, that goes aligned with your plan, with your point of what's your objective, what you want to do, and that's the problem of Dubai.
Correct. So people are not disciplined, right?
Exactly.
We're very short-sighted. It's like, oh, this summer was bad, I want to switch. And if you do chop and chip,
is the word
you're not going to make money, right? Because there's a cost. There's a cost of setting up a holiday home. There's a cost of taking away. And there's a cost of putting back on. And then you lose your time, right? Because you're going through this in and out. Your apartment sitting vacant. The whole idea is you maximize for your occupancy. That's how you make money. So you really need to be very clear on your objective. You need to stick to it, right? And then if your objective changes, then you make your strategy shift. But you have to give the strategy time to work. You can't look at it from season to season. And there's also market dynamics, right? As long-term continues to increase, more people will be like, I'm going to move their properties from short-term to long-term, which will obviously have an impact on the supply.
Correct.
That could also have an impact, but those things take time, right? They don't happen overnight.
No.
It is a transition. So, but coming back in terms of your investment strategy is like, then, that becomes a very important factor for me when I think about investing in properties, because ideally I want the serviceability of the unit to be very high. And what I mean by serviceability is I want a unit that is flexible. Flexible in the sense, hey, this is a great unit for long term, and this could potentially be a good unit for short term, because then that gives you that variability, right? Then all of a sudden you have another tool in your tool belt to play around to deploy different strategies at different times of the cycle. So you can take advantage of how Dubai trends is like, hey, now I'm going to shift, but you don't do it rapidly. You do with the cycle. So that's very important. And the other thing is, the way I look at short-term rental is, I've gone beyond the holiday homes, right? I really think there's a whole market, what I call as temporary accommodation. And what I mean by that is like, 1 to 9 months horizon. You're starting to see a lot of that in Dubai, mainly because there are people that are either coming here to find jobs or set up businesses, and they need longer time frames where hotels are very expensive. Traditional holiday homes in sort of tourist areas become expensive. So if you look at the short-term market, areas like JVC, Dubai Hills have done phenomenally well. I would say better than Palm, Marina, and so forth, that are less touristy because of that segment. They rent month to month, so your overall costs are lower for managing that, right? As opposed to daily management. So that has a big impact on it. The entry points on those are lower. So your return on your capital is actually really attractive from that perspective. So I think that's very important, that you need to understand the flexibility of the unit and be cognitive of what are the segment that you're going for to give you the best opportunity to maximize returns.
And also I like to call it flexible living. Also allows to bridge the gap between the checks in Dubai. No, in Dubai there is a huge initial cost when you move into an apartment. You have the furniture, you have the checks, you have the agency fees, the deposits of DIWA. So eventually that can be temporary, but it can become your life, renting to a short-term rental company, but paying on a monthly basis for a ready to move in apartment.
Yeah. So if you think about it, that goes both ways, even for long-term rentals, right? So
exactly.
We as a business, we started looking at holiday homes back in 2018, 2019, right? Well before it became a mainstream idea. And even now, there's a lot of talk about rent now, pay later concepts. We saw exactly what you are saying, the challenge back in 2018, 2019. I'll give you a simple example. A small studio in an affordable area like IMPZ. If you did the math of someone who's looking to rent a small studio, at that time, the rents for studios were, I think, around 20,000 dirhams. You have to pay 5% deposit to the landlord. You have to pay DIWA deposit. You have to pay chiller deposit. You need to get appliances. You need to pay brokerage commission. For a 20,000 year rent, you need to have like 8 to 10,000 dirhams liquid cash today to rent.
Plus the furniture.
So someone who can afford 20,000, you think they have 10,000 dirhams in their pocket to do that? No. So like, well, hold on. This is the problem, right? So like, okay, you know what? We will offer 12 checks. We will furnish the apartments. We will put the utilities on the landlord's name and give the tenant the flexibility to pay the landlord's bill. So they don't have to pay those utility deposits. All you have to do is pay the deposit, pay the commission to the broker, and move in and pay 12 checks. But you know what? I'm not going to charge you 20,000 dirhams rent. I'm going to charge you 28,000 dirhams rent. And people were more than happy to pay that extra because they didn't have to put the cash flow out front. So all of a sudden, I'm buying units for 200,000 dirhams, 210, 215, and renting them for 28,000. Do the math in terms of what the return on that money is. And those apartments today are going for like 370, 380, and rents are 40, 45 on the same strategy, right? So this only comes if you look at the data, right? And that strategy still works today. Obviously, a lot more competition because people have caught on and figured out, hey, there is that opportunity. Same thing applies today. Like if I move to Dubai and I get an apartment, right? Do I want to be stuck in traffic every day, going to IKEA, furniture shopping, try to set up my place, or I just turn up and I see apartment's ready, I like it, pay, get the keys, all I gotta do is bring my suitcase and I'm set. That's why if you look at the data from Property Finder, from Bayouth, etc., almost 60 to 70% searches are for furnished units. Right? So there's value in furnishing your apartment regardless of whether it's short-term or long-term, because you do get more value for it because people love the convenience. And you have to be careful. You have to do that in the right places, right locations, right? So downtown, Business Bay, DIFC, all these centralized spaces, people just want the flexibility, turnkey solutions, right? Obviously, big villa communities, etc., families, then you have to be cognitive of that. But I would say small townhomes, even so, I think rental strategy as being furnished works really well.
Yeah, we see that one of the best returns in the whole market are townhouses and villas. Families that are doing renovations and need a 3 months place to live, they're willing to pay a huge premium not to change neighborhood for the kids, for everything.
For school, etc., everything, right? Because they don't want to disrupt their life.
The supply there is so low.
Very low. And that strategy of people buying to upgrade or renovate, etc., is a theme that's going to continue to grow, right? Because the challenge is there's a lot of people that want houses to live in today, but the one, there's lack of supply that's available, that's vacant. Second, if it is, it's very dated, right? Yeah. But really good communities, Spring Meadows, Islands, Jumeirah Park, etc. Really good communities, very central,
very well,
very dated, good sizes. So they need to renovate, etc. Because anything that's new is 3-4 years out in terms of being ready, because they're all off plan. So there's a market that's going to grow, and that will bring opportunities for temporary accommodation to accommodate those people that need to live in a place while the other place is getting ready, etc. and so forth. So yeah, absolutely right.
Let's take a moment to thank Mr. Alfred, our sponsor. They're not just a property management system. They're a comprehensive solution for vacation rentals, offering everything from dynamic pricing to efficient marketing. Their intuitive platform simplifies operations so you can focus on growth. Excitingly, Mr. Alfred now offers a free light version, including a channel manager with connections to over 60 OTAs. To learn more and to start streamlining your rental business, visit mr.alfred.com today.
So, anyone looking to invest in Dubai, what are the 5 things that they need to look at? And where?
Oh, God. There's a lot of things, right? This is an art. There's no science behind it. 5 things.
The headlines.
So listen, so all the things we talked about obviously results in cash flows, right? So that's very important. So you need to look at the cash flows. Because that's very important, because that will dictate what's your holding power, right? So that's very important. Second, you look at the location, right? So for me, cash flow comes before location. Location is the second thing that I'll look at.
But location has to do with other indicators like price per square foot.
Of course.
Demand and supply.
100%, right? So those are the next characteristics that I look at, right? In terms of, you got your cash flows in place, you look at the location, because you can make a lot of cash in certain places, but the location might not have, good prospects for the future, right? Because it's not only looking cash flow today, it's the sustainability of that cash flow over the next 5-10 years. And you got to look at the total return of the investment, not just cash flow. So location is like, okay, do I invest in this or versus this? In that area, the cash flows might be low today, but they might increase in the future. As well as the prices, etc. So, that's why the objective of your time horizon and what you're trying to achieve is very, very important. So cash flow, then location. Then after the location, you look at what's my entry point, price per square foot, relative terms, service charges. To rent ratio is very important.
Because that protects
you. Sorry?
The
service charge to rent ratio.
Okay.
Right? So obviously the market has moved a lot, etc. Right? Back in the day when I used to look, I had a threshold 15%. Anything more than 15%, I used to get nervous. Has to make a lot of sense as to why I would do that, etc. So you have to look market conditions, etc. So that ratio changes. But what's important there is because service charge is a very big component of your cost. So if you're paying more service charges, that obviously have an impact on your yield, because that's not going to change. If rents go up and down, that is a fixed cost. So that service charge to rent ratio is a very important one, because that really has an impact on your cash flow. So you look at all these elements. And then when you're looking, then I would say you look at the supply-demand dynamics in that particular area, right? You can't look at supply in isolation, because if you look at supply in isolation, you wouldn't have touched JVC or Business Bay in the last 3 years. We got so much supply coming. But those are the most transacted areas in the city as well too. So all that supply has been absorbed. So supply is not a bad thing. You need to look at it in the context of demand, right? Then you need to do your homework. Is it studios? Is it 1 beds? Is it 2 beds? Where is the demand? Where is the supply? Where is the gap? Trying to figure that out.
How do you check the demand?
So now you know what's amazing now is you have a lot of data available, right? So you can see the Jari data in terms of, hey, what's being rented, etc., and so forth. But the beauty of Dubai now, with more and more IPOs happening of public companies, etc., you have a lot of good proxy data. What I mean by proxy data is now Salik is a public company, so they have to disclose, financials, management reports, etc. So now every quarter, I can see, hey, is Salik up or down? Revenue, right? Are more cars going through the toll gates, right? Which toll gates are more busy, etc. That gives you good indication as to, hey, where's the traffic? Where's the movement? Diva, where are the connections? Where are the disconnections? Where are people migrating in the city, etc.?
But these are transactions. In the end, the key here is to see where are people looking at. Do we have data of searches? Do you have data, or this data is not available?
No, so Property Finder, they do their reports, they disclose, what are the top searches, areas, etc., and so forth. So you have to factor that all in. Obviously, not everyone has the ability, but people like you and I that are in the industry, we have a network of brokers, etc., that we get, information on the ground. It's like, hey, what's happening, what things are moving, etc.
That's a good tip as well.
You manage portfolio, so you have an understanding. Hey, these properties are renting within 2-3 weeks. These properties are taking longer to rent, etc., and so forth. So that gives you a lot of intuitive. That's why it's very important. Anyone who's looking to do this should consult people that are experts in this space, right? Because you trying to do all this yourself is very, very, very difficult, right?
And how long in advance a person takes in order to make an investment decision, and not a professional investor, someone that's buying the first apartment? What's your experience?
Yeah,
what do you recommend?
Yeah, so I think you're never going to time these things, right? So you need to get that out of your mind, your mentality. That am I getting the best deal or not, right? There's a famous proverb, which I also said in the last podcast, is, the best time to plant a tree was 20 years ago. The next best time is today, right? You have to start. What's important is do all your homework, and you have the holding power to hold long enough. Because if you're buying today something at the average price today is 1,500 square feet. You're not buying this thinking that in 10 years, the price will still be 1,500 a square foot, right? You're buying because you think the prices in the future will rise to 2,000 or 2,500. So if that's the case, whether you buy it at 1,400, 1,450, 1,500, 1,550, 1,370, is that really going to make a massive difference? I don't think it's going to move the needle very drastically. Obviously, if you do get corrections, which is fine, right? But those are paper losses. You only realize that if you exit, and you only exit because you haven't planned it properly. You don't have the holding power, and if the prices go down back to 1,100, and you put yourself in a position where you're desperate and you exit, of course you crystallize your losses. But those 1,100 prices, this 1,400 went as low as like 900 not too long ago, right? And it's come back at and has surpassed all-time highs. So if you have the ability to hold, you will recoup that money, because you also are getting rental income during that period. So that's very important to think. But for first-time investor, it takes a long time, because it's a very emotional decision, right? It's not easy to comprehend on this, but you have to do your homework, consult with relevant people, but not too much, right? Because you can also get confused, get overwhelmed with all this information. Because what I'm saying, for me, it's very easy to process this intuitively, because I've been doing this for so long. But for average person, it's really difficult to do that, because every strategy, every area, there's a different way of looking at it, pros and cons, etc. Like the other day, somebody called me asking, hey, listen, I'm looking at some apartment in MENA, and what are your views, etc. And I just went through this whole process with him, and I apologize, because I was just talking through
questions,
right? Because listen, this is how I think, right? So I'm looking at all the different elements. You're like, man, this is extremely helpful for me, because you're going through your thought process. You're not just giving me an answer. You're actually walking me through how to think about it, to understand, hey, what are the risks, and then tying that up versus reward, compared to what else is available in the market, right? So you have to look at it. You can't just look at it in isolation. You have to look at, okay, if I'm paying 2,000 dirhams per square foot something, how does that compare to something else in the market? And what is that? Am I better off paying, something for 1,800 and getting that, or even paying 2,200 and getting that versus this, etc. and so forth?
Yeah, look, I can share my personal experience. I recently, the last 6 months, I bought a property to live in.
Oh.
And it was funny because the minute we stepped in that property, I knew that was the property. I said, that's the one. So if you say the statistics, how long did it take for you to make the decision? 1 hour. But that's not true, because I had been 2 years looking every week at 20 properties, analyzing the data, and so in the end, if someone wants to enter into the real estate and the property ladder, be in the market, understand the market, drive to the locations, go around Dubai. I know we're very busy, but take the car and go to Expo City. Everyone talks about Expo City. Go one day.
Yeah.
Go with the metro even. Because suddenly maybe you realize you spend 20 minutes waiting for the metro for Expo City because it's it's the last
Stop. Yeah.
stop. No? So I think the preparation, understanding the market, knowing the data, which data, it's extremely important, and anyone that wants to invest can do it. Like when they don't have anything else to do at home with the phone. So I think it's very important to always look at the market. It's a market that's very transparent. It's even good for conversations with friends, about
100%.
real estate. So everyone should be always looking at what's going on in the market. Property Finder by you, Dubizel. And then when you want to make your strategy, then know what you want and why, and then you will have all the data and your experience of the previous months of year.
Agreed.
Very good. So I think we are reaching an end. Thanks again for coming back and sharing with the audience all the tips for investing. If anyone wants to find you, LinkedIn or...
LinkedIn is probably the best place. Yeah.
Even though now it's like super spam, but LinkedIn is the best to contact you. Very good. And hopefully we'll have you in season 3.
I look forward to it.
Thank you very much.
Thanks for having me.
Next Gen Rentals is brought to you by our main sponsor, Mr. Alfred. Mr. Alfred specializes in making vacation rental management effortless.